consecutive winning sessions for healthcare stocks, all of that and so much more sets the stage for the show. And speaking of it, welcome to the show. You're watching Taking Stock. I'm your host, JD Durkin. Just mere moments away from Khosrowshahi and Bastian and the teams from Uber and Delta set to ring the iconic, the one and only closing bell here at the New York Stock Exchange. We do have a little bit of light now, I would argue, at the end of the tunnel with regards to the ongoing federal government shutdown, now 43 days long. We are expecting that to officially come to a close here within the next few hours. And if all of that weren't enough, how about the Dow Jones Industrial Average set for its first ever close above 48,000. It goes all the way back to 1896, so a bit of history here on Wall Street as well. I'm going to stop talking and let the teams from Delta and Uber now take it away. Delta, Uber, here at the New York Stock Exchange, set to do the honors. And Dara Khosrowshahi, the CEO of Uber, with the three strikes of the gavel here on this Wednesday, November 12th, officially bringing about to a close this very busy and eventful, jam-packed day here on Wall Street. Here's a look at the tail of the tape. The S&P 500 trying to make up its mind in the session today. Now it's going to finish up fractionally 0.06%. It's still in the green. It still counts. A win is a win, as we say in the world of football. The Dow Jones up about 0.6%. The NYSE Composite Index 0.4. And as we said off the top of the show, the small caps here down 0.3 as well. Let's bring in Michael Reinking, senior market strategist here at the New York Stock Exchange. Get Michael's perspective on general price action, what he's seen across the market landscape, and so much more. Thanks for being here as always.
Hey, thanks for having me.
So this is my favorite big board to look at, which the folks at home can't see, but we really get a sense. It was positive territory, negative territory, trying to make up its mind. Yep. What did we see for price action today?
I mean, today was kind of interesting. So we did see a little bit of this expansion of breadth that people have been hoping to see within the market. Right? We saw kind of over the last couple of weeks, we've seen that AI debate get kind of really loud. And we've seen a little bit of a pullback within that complex. And what we're seeing kind of on a broader perspective, from a broader perspective, has been healthy. We've seen some of the more speculative areas of the market begin to unwind, and we're seeing kind of markets move into a little bit more quality recently. Right. So today we had healthcare, financials performing really well, and that's what pushed the Dow to the fresh all-time highs.
Yeah, that's right. Goldman Sachs in particular, the most weighted name in the Dow. Goldman, Wells Fargo, B of A, all reaching fresh all-time highs. At some point here, maybe tonight, the federal government shutdown, this long-running national nightmare, finally put it behind us here.
Yes.
43 days. What does this mean for investor sentiment, you think, moving forward?
Yeah, so, I mean, we saw the airlines, that's one of the areas that have been impacted the most, right? Kind of fitting for today, we saw those stocks kind of moving higher. I think kind of the big question from a market perspective is what happens with economic data. So we don't know exactly when we're going to see, kind of the economic data coming out. We heard, the administration suggesting that that October data may never actually come, so it'll be a black hole on a go-forward basis, right? But as we look into kind of the December Fed meeting, right? If we start to see the data, kind of from the November timeframe start to be released, that data will likely be kind of supportive of a potential Federal Reserve rate cut. But then we saw last night in the Wall Street Journal kind of highlighting the divide within the Federal Reserve Committee, right? And the idea that we could get a December cut that's accompanied with a little bit of more hawkish messaging, suggesting that the rate cutting cycle will be a little bit more shallow than markets had expected.
Yeah, in another universe where the government didn't shut down, tomorrow you and I would be here celebrating the release of CPI.
Yes.
And PPI the day after, which we're not going to get this week. Earnings season overall, obviously not to drill down on any individual names, but kind of what's the big line takeaway for how we've seen on the backdrop of a lot of macroeconomic uncertainty and renewed questions over just how strong the U.S. consumer is right now?
Yeah, so I mean, like broadly speaking, right, we're seeing a very strong earnings season, double-digit earnings growth, and that kind of goes back to the financial performance today, right? So we had the financials put up very, very strong numbers at the start of earnings season, right? Those stocks kind of traded sideways for the last couple of months, starting to resume to the upside at this point, kind of a correction via time, not price, right? And then the other big theme, obviously, along with everything else, is kind of AI, right? We continue to hear about the insatiable demand, right? And just how much money is being plowed into those investments, right? And that's been a big driver of the markets. We did get a little bit extended on some of those, kind of some of those topics, and as we had kind of this everyday announcements, kind of the growing halo effect of NVIDIA and OpenAI, right? You started to see markets get a little bit desensitized to some of those, kind of some of those announcements, and kind of the price action on the back end of each of them got a little bit, kind of a little more shallow in terms of how much we moved higher, and now we're just kind of starting to digest some of those moves.
Yeah, we're having this renewed question over circular financing for a lot of these AI deals. We'll have to have you back soon. We'll continue to talk about that and much more. Who better to kick off this broadcast than the great Michael Reinking, longtime friend of the show. My man, thanks for being here as always.
Thanks for having me.
Great to have you here. Josh is going to grab your microphone. Howie, you and I are going to go for a walk here. Every day is exciting here at the New York Stock Exchange, but when Dara Khosrowshahi and Ed Bastian are down here, it's particularly exciting. We're going to take a look at the event contract odds for one closely watched Polymarket contract, not finance or crypto related. How about this question? Who will be the top Spotify artist of 2025? Right now up on Polymarket, 95% odds in the minds of market makers there. It is going to be Bad Bunny. 5% chance it is Taylor Swift, thank you, Howie, and a 1% chance it will be Bruno Mars. Taylor Swift, the most listened to artist in Spotify history, followed then by Bad Bunny, Drake, and The Weeknd. Spotify stock, by the way, up 42% from the start of 2025. Howie, time now for a few NYSE notables here on the day. We'll start with a look at shares of Delta, appropriately so. Michael and I were just talking about airline stocks soaring here on the day. One of the best performers in the S&P 500. CEO Ed Bastian, who was just here for the closing bell, expecting a strong Q4 despite ongoing challenges from the federal government shutdown. The stock is trading back above its 50-day moving average. Shares are flat year to date. And finally here, Howie, in honor of National Happy Hour Day. Yes, it is today. I also don't know why it's a Wednesday, but this team from AB InBev, this is, of course, the name behind Budweiser, Corona, Stella, having a great month, up 10% the last 4 weeks, 30% from the start of the year. Kicked off a recent $6 billion buyback program. We will watch for how stretched the U.S. consumer is amid tightening economic conditions. Budweiser down 0.3% in the session. The New York Stock Exchange's very own Ashley Mastronardi sat down with Dr. Loretta Chen to discuss how Smobler operates at the intersection of the physical world and the digital world. Take a look.
Smobler is an AI and blockchain company that says they're the future of the phygital world. That's a combination of physical and digital. Joining me now is founder and CEO of Smobler, Dr. Loretta Chen. Welcome to the New York Stock Exchange.
Oh, thank you so much, Ashley. Thank you for having me. It's just so wonderful. What an honor.
Of course, great to have you. So tell us, what is Smobler?
So Smobler is an AI and blockchain company. So we actually have three pillars of our business. So the first is we build educational games on chain. We also have our AI pillar, and so we build AI for compliance, largely for the food industry. And lastly is our blockchain arm, and we are actually creating a maritime digital bunker tool as well as a means to financing bunker.
Can you explain and elaborate on those three key pillars of Smobler?
The game, I think, is self-explanatory. I think increasingly people are spending more and more time on gaming platforms. And so that's one of the things that we really wanted to go into, was to create educational games, because one of the things that I feel very strongly about as an educator is that a lot of games today are much too violent. So that was one of the first starts that we had in the blockchain industry. As we developed, I began to recognize it as an opportunity for us to take real world businesses on chain. So this led us to start creating a collaboration with Miston Labs, and they've invested in us. And together we're creating a digital bunker tool that helps in the refueling of ships in the open sea. And now we're taking that transaction on chain. We're also looking to create a instrument to enable the facilitation of financing of bunker. And finally, our AI arm really seeks to intervene and help food entrepreneurs go to market quicker. And so what we've done is to create a platform that enables any entrepreneur to be able to access nutritional labeling, the HSEP plan, which stands for a Hazard and Critical Checkpoints program. I know it's a mouthful, as well as helping the food entrepreneur work through their logistics as well as their balance sheet.
Now, Loretta, you have a background in theater. How did you make this move? When did that move happen into this digital space?
As with most people, I think COVID was either a hit or miss, right? A bane or a boon. And for me, I was an entrepreneur, and I exited, and I was in Hawaii living my best life as an educator. But during COVID, I realized that a lot of my co-workers that lost their jobs because I ran one of the biggest branding and marketing agencies in Southeast Asia. We design and build retail stores. And I realized that a lot of my staff were not going to get those jobs back. And so I started thinking, how might I be able to create and empower and enable a platform for a lot of my designers to transit? And so one of the things that I realized was that most families were staying at home during COVID. And one of the things that they were doing was spending time gaming. And so I figured that if there was one space I wanted to get into during COVID was the game space and to really try to create empowering and edutainment games.
Do you think if you're a successful, effective storyteller, you can be successful in other areas?
I would think that storytelling is foundational, but truthfully, I think we must have empathy at our core. We must have expertise as our engine, and I think we must have excellence as a differentiator.
All right, Dr. Loretta Chen, founder and CEO of Smobler, thank you so much for joining us at the New York Stock Exchange.
Ashley, thank you so much. I'm so proud to be here. Thank you so much for your time, and yeah, thank you.
Welcome back to the broadcast. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. Time now for the show to bring you the latest headlines you need to know in the world of fintech, crypto, and artificial intelligence. First up, crypto markets slumping today as ETF outflows, macro uncertainty, and leverage shakeout spark a bit of a broad risk-off move across BTC, ETH, and Sol. We'll follow that throughout the week. Next up, Anthropic announcing a $50 billion investment in data centers across Texas and right here in New York. That's set to create nearly 3,000 jobs and position the company to compete with OpenAI. And finally, SEC Chair Paul Atkins outlining a major shift in crypto policy, unveiling plans for a token taxonomy that could clarify which digital assets count as securities. That's the latest you need to know in fintech, crypto, and AI. Let's now chat with our next guest, John Morrow, co-founder, COO of Gauntlet, join us now here on the trading floor. Welcome to the Gauntlet, my man. No, it's nice to have you here.
All right, hey, thanks for having me.
Let's start first and foremost with a bit of an introduction to the work you and your team do at Gauntlet, and talk to me about your top priorities right now.
So at Gauntlet, we build financial modeling software for DeFi. Right now, about $42 billion relies on our platform for risk management, as well as we have about $2 billion invested in our automated trading vaults on-chain.
What most excites you about where the underlying technology is now? And also, what do you hope continues to change as the regulatory framework also continues to evolve next year?
Yeah, you know, I think it feels like the future of finance when you do things in DeFi or on blockchain, they happen faster. You see, people like Larry Fink saying, hey, I think all assets are going to be tokenized eventually. I'd love to see that trend continue. I think in DeFi you have better transparency, better visibility into markets, and also open markets that anyone can participate in. So, I think there's a lot of room for innovation, and we just need more and more people to sort of jump on the bandwagon, and it seems like that's where everything is headed. So,
what needs to happen for more people to jump on that bandwagon? I'm sure it's a little more complicated than simply raising awareness, although I'm sure that's part of the equation.
Yeah, so I think everyone kind of has heard about crypto, probably some good and also probably some bad things as well. I think the things that are going to get people in traditional finance more excited about DeFi, more comfortable with DeFi, are things like better regulatory clarity. You had announcements from Atkins today, as well as a tweet from Scott Bessent a couple days ago, helping further clarify, one, that the U.S. government is supporting crypto, and two, that they're looking to provide regulatory clarity so that people can continue to innovate within the space. So I think regulatory clarity is a huge part of it. And two, I think the other thing is a track record. People want to see crypto survive market downturns without blowing up. Of course, we had a couple incidents a few years ago that certainly did damage trust, but we've had a few years since then to rebuild it, as well as build new products that give people a real reason to come on chain, because you're going to be able to have better returns, better transparency, and I'm a little bit biased here, but in many cases, better risk management.
In what ways do you hope, or what ways do you think the broader crypto landscape will continue to evolve? New regulatory changes, you mentioned support from the administration, people like Bessent, Atkins, many others. How do you hope? What are your expectations as the space continues to change, not just for 2026, but maybe even a bit beyond that?
Yeah, I think one thing that we've seen a little bit over the past year is that people have been starting to bring other capital flows on chain, whether it's real-world assets. I mean, if Figure Markets IPO'd a couple weeks ago, they're doing really well, bringing billions and billions of dollars of home equity loans on chain. And, we just want real productive yields and real productive flows of capital to balance out crypto, which has had for most of its history, a little bit more of a speculative, flow of capital on chain, where it's people kind of gambling, trying to make money, and betting on sort of long tail projects that they might believe in.
Before I let you go, talk to me about the current state in general of where DeFi is, the ways it's changed, but also kind of where it is right now. How would you define or describe how far it's come and maybe what's still left to come after this?
I like to think of DeFi a little bit like a teenager. In that, I think we were like a toddler the last time around, and toddlers they break things, they have tantrums, etc. I think the thing is that we are maturing. It's not quite to the point of traditional finance yet, but in the end, there's just a growing ecosystem of chains on which people are investing. I think Solana is a great success story from this year, going from $2 to $10 billion of assets on DeFi protocols on Solana, and then on top of that, we have incidents like on 10/10. It was the largest liquidation day in crypto's history, and for the most part, DeFi held up pretty well. There's a couple of exceptions there, a couple smaller protocols that had issues, sure. But as people see this longer track record, people are going to be able to trust DeFi more and take advantage of this technology that really has, that really has a lot of advantages over traditional finance.
For sure. Really grateful for your time to be here. You're welcome back anytime. John Morrow, co-founder and COO at Gauntlet. My man, absolutely crushed it. Thanks for being here.
Thanks, man.
Folks, don't go anywhere. Much more Taking Stock is coming up right after this. Welcome back to the show here on the trading floor of the New York Stock Exchange. Yesterday, FinTech TV's very own Remy Blair sat down with CEO Mike Ibarra of PrizePicks to discuss their exciting new partnership with the team at Polymarket. Take a look.
Welcome to FinTech TV. I'm Remy Blair. Sports meets Wall Street and prediction power. PrizePicks is teaming up with Polymarket to launch a first-of-its-kind federally regulated prediction market for fans. And this isn't just fantasy anymore. With Polymarket's blockchain infrastructure and compliant layer, PrizePicks is giving millions of sports fans a way to invest their instincts and perhaps turn opinions into outcomes. So, are prediction markets the next big leap in sports entertainment or the next frontier in finance? Well, joining me live at the New York Stock Exchange is Mike Ibarra, CEO of PrizePicks. Mike, great to have you here. Thank you so much for joining me.
Thanks for having me. It's great to be here.
Well, tell me about this partnership and what you expect this impact to be for sports fans.
Well, we think it's going to be significant. We're here to announce that starting this week, we're rolling out prediction markets at PrizePicks across the United States. And PrizePicks has been the number one DFS operator for multiple years now in the US. And we've done that through creating great products and always innovating for our customers. And prediction markets is the next gateway to that. We think it can really accelerate the business, but more importantly, provide more competition for our industry, and then of course more options for customers.
Yeah, and speaking about sports fans as well as your customers, give us a better understanding of what this means when it comes to the trust, transparency, as well as safety for users.
Well, it's interesting. When you do prediction markets, it's peer to peer. Think of online sports betting. Those operators, they set the lines and they build profit into those lines, and you're playing against the house. In prediction markets, you're playing against each other. It's an open market and it's really about supply and demand. So that changes the game fundamentally. And we think it's going to be something consumers embrace, and we couldn't be more excited.
And depending on who's watching and who you're talking to, prediction markets mean different things for different demographics. So tell me how prediction markets actually changes the way that fans interact with the game they love.
Well, on PricePick specifically, we're a DFS operator, and so what prediction markets is going to do is deliver actually one of the biggest requests our customers have asked for, which is the ability to do team picks. So will the 49ers beat the Rams? Will the Giants beat the Jets? And then point spreads and other elements like that. So really it complements the technology we have today and opens up a lot more possibilities for great entertainment.
And speaking of possibilities and opening up possibilities, can you give us a little bit of insight into the demographic of prize picks and also what some of the requests are?
Yeah, I mean, the team's done a phenomenal job in building the brand of Prize Picks. We have a very young, diverse audience, and we love that. It keeps us always on our toes because they're not afraid to give us feedback on what they want in the product. And so, again, that just drives a lot of innovation and a lot of customer feedback for us.
Yeah, and I do want to ask you more about the growth at PrizeFix. So give us an inside look into what's happening and what you think this means for the company against traditional sports books as well as fantasy operators.
I think we're in a pole position right now. Our growth profile continues to go up at incredible rates. It's a lot of hard work by the team. And combine that with prediction markets, and all of a sudden, we're going to be in 38 states with prediction markets rolling out this week. 15 of those states, including DC, will be sports. And so, but it's all new states for us too. We don't operate, for example, in the state of Washington. And thanks to prediction markets and the federal regulation, we'll be able to deliver prize picks to millions of people in Washington and many other states as well.
And finally, before I let you go, you mentioned some keywords there, including innovating. You come from a background in technology as well as gaming. So, what are some innovations that you're paying attention to, and what do you think is going to be the next big thing?
Well, people are so socially connected these days, and that's been for a while now. But I think the industry that we're in now, the gaming industry with Prize Picks, can socially connect people together. Why couldn't me, you, and the people that put this great show on have our own group in Prize Picks where we're competing just with each other? The future is going to open up a lot more integration and social.
Well, Mike, great to have you here at the New York Stock Exchange. Thank you so much for joining me, and thank you so much for sharing the story of Prize Picks.
Thank you.
My pleasure. Welcome to FinTech TV. I'm Mary Blair. We're here at Money 2020 USA in Las Vegas, Nevada, and I am joined by Credcore co-CEO and co-founder, Salmil Angari. Thank you so much for joining me.
Thank you for having me.
Well,
Very excited to be here.
Yeah, it's such an exciting event this year. We are on day 3, so we've heard from a lot of companies regarding announcements as well as from fireside chats. But I do want to start by asking you about Credcore. What exactly do you do?
So Credcore comes from the world of two different worlds, credit and technology. And we're marrying those two to solve problems for one of the biggest markets in the world, the credit markets, public and private credit, which is about a $5 trillion a year market annually. And we are bringing technology to automate processes, expose hidden risk, manage investments in that space. And we are actually here because we were nominated and won an award in the banking sector. So that was pretty cool.
Yeah, congratulations on that award. Now, I do want to ask you, since you are at the intersection of credit and technology, and we know that is fragmented, and you're currently training proprietary AI models, tell us about the oversight part of that.
Absolutely. I think we have something that we say internally, which is almost right is almost always wrong in credit, because you either are 100% correct or 0%. There is no concept of 70, 80, 90% correct. So oversight is very critical in the world of finance, capital markets, and then credit even more so, because you don't have room for lack of precision. So we make sure we've got domain experts who are ex-debt guys, ex-credit professionals, training the models, but then also making sure what comes out of the models is actually perfect, accurate, etc. Because it's very important, our customers don't have to lift the load of changing and checking if it works. Instead, we lift that load for them. So that oversight, I wouldn't say is a luxury as much as it's mandatory in the credit world.
And I understand that you have secured Series A funding. So tell us about that, and what does all of this mean for the future of Credcore?
We're very grateful for having our Series A with some fairly unique investor base. So it's all public as well. We've always thought of our capital structure of Credcore as a balance between investors who are financial investors, like the VCs traditionally, and strategic investors who come from the credit world. In that vein, we're very excited to be backed by the likes of Inspired Capital and Avatar Ventures, Inspired at Seed, Avatar at Series A. And on the strategic side, we've got the likes of Fitch, the ratings agency. We've got family offices, senior credit executives. What this does for us is it gives us guidance as not just capital, mentorship in a world where credit routes are very critical for building the business, not just the product and business development, but also how you think of where the credit world is going. So we're very excited of putting together the right consort and constituents to help us drive the next phase of growth.
Well, Salmil, it was great to have you here. Thank you so much for sharing the story of Credcore.
Absolutely.
And of course, congratulations on the award.
Thank you for having me.
Thank you.
This is really exciting.
My pleasure.
Thank you.
Welcome back to the show. Tomorrow morning, we will hear from the House of Mouse. Disney is expecting earnings per share of 104. We will see what they deliver. That's going to do it for Taking Stock, and we will see you tomorrow.